All right, this is going to be a crypto market update as well as a global macro update. We're going to be going over both the equities market as well as crypto. I'm not really going to be touching on gold so much, but I think the main thing we're going to be looking at is going to be just the equities and kind of the crypto market, looking at the main currencies we see right here, or cryptocurrencies we see right here. So, going to get the recording here very shortly and get this going. Just updating some stuff, changing the thumbnail. All right, let's get the recorder. Something needs to install, I guess. Probably wouldn't take too long. Hope everyone is having a good long weekend. It's a long weekend for Canada as well as the States, so basically everyone has it. Stock markets are not open. All right. Just pulling out the recorder right now, so we'll get started very shortly. First thing we're going to be looking at is the NASDAQ, the S&P, and then we're going to be looking at the NASDAQ. The S&P is going to be a pretty major index that we're going to be looking at, key previous all-time high that we're retesting now. And the next will be the NASDAQ, and then we're going to go into crypto shortly. Hey traders, welcome to another global macro update. We will be looking at crypto a little bit later in the video, but we wanted to start off this global macro update by looking at the S&P 500 index. We do see on the daily chart, we do have a candle closure closing above the previous all-time high back in February of 2020 before the huge meltdown of obviously the COVID crash. So we do see that very well-respected zone on the daily chart. Let's zoom into a smaller time frame to see what we're able to identify. On the 4-hour as well, we see a wick protruding below this level of support, but the buyers were able to come pick it up and push the price back up to the key level of demand. And the next 4-hour candle was a bullish candle, not an engulfing candle, so not extremely bullish, but it does show that there are buyers interested at this around $3,400 level. So in my opinion, very, very a key level of significance. We do want to see if the price is able to hold this zone. When we move on to the 1-hour, which for me would be the execution time frame, we do see that there was a candle closure below the zone, but this is our first injection of buy pressure. We have not really broken above a significant level of a high right here. We do see previous level of support turned into new level of resistance right here. So in terms of the area that I would want to see break, I'd want to see around 3480 break, where we see previous levels of resistance reject the price, making higher highs around this level. So what we could be seeing is a little bit of a bottoming like this, where you're going to get a failure to break into a lower low, and you're going to get a failure to break into a higher high, creating a horizontal channel. And what we're looking for is to inevitably see that higher high, and then there's going to be potentially a pullback, which then we're going to be looking for entries before the next impulsive push to continue the overall trend to the upside. And that would be as long as we're holding above this zone right here. We do have these nice bottoms that we look for, where we see a series of lower lows, and then you see a halt of a low not making a lower low, and then you see a higher low and a higher low. This could create an ascending triangle formation right there, or if you're looking at it more broadly, it could just be a nice bottoming structure right there. So that's what we're going to be looking for within the S&P, holding the $3,400 zone, which was a previous high back in February of this year. So that's going to be the S&P. We're going to be looking for that. If it does break to the downside, we do want to see validation confirmation on the daily candle that we've closed below this 34, let's say 33.98 zone, not an exact price point within the chart. So if we do break below that zone, we do have to change our bias. It may be shifting into a risk off sentiment. We do see the US dollar potentially bottoming here. We will talk about that right after the NASDAQ. But that's my view on the S&P. We will go over our multi-asset analysis so we're able to understand not just, one index or even one asset class like equities, but we're, doing our due diligence, understanding what the overall global macro landscape is looking like. So that's going to be the S&P. Let's quickly look at the NASDAQ, which is also in a key zone of confluence. You see that there was a resistance zone right here. Let's get that red because that's a resistance area. And that's creating a level of demand. It does see a little bit of a break to the downside, but we also see additional levels of support right here created by the series of higher lows, and that previous high before the massive impulsive push is now acting as a new level of support. So overall, there is quite significant amount of demand that's forming at around the 11.3, 11.28 around zone right around here. And if we do fail below this zone, we could see a potential formation of a head and shoulders where you get the left shoulder, you get potentially a right shoulder right here, and this could be the head, and that could be the breakout zone right around there at around like 10.7, 10.6, but there does have to be a lot of stuff before that even is a possibility. So right now, we're just looking to continue the trend, and in my opinion at least, this is a potential higher low that is going to continue to the upside because, in my opinion, there's not really anything in the kind of news fundamentally that would absolutely shift the markets to the downside. The first time we saw a really bearish push to the downside, yeah, there was some initial claims data and the economic data that came out, which wasn't the best, but there has been way worse economic data that came out that, in my opinion, has been much more significant, but has not impacted the market really since we've been recovering, late March, early April is when we kind of bottomed, right? So since then, we've had a lot of negative economic data that came out and has not really impacted the market. Look at where it's gone. It was up over 61%. Now it's at just hovering maybe at 50%. So even in a span of a year, that's unbelievable. So people who bought the dip are definitely benefiting every single time it has dipped. Now we're going to quickly look at the US dollar index, which is basically the strength or weakness of the US dollar. Now, if we go back to the weekly chart, we know that we have been in a bearish push for quite a while here. I'm just trying to get rid of this right here. Having some difficulties. There we go. And we're in an area where there could be a level of support. We see back in 2015, 2016, a little bit of 2017, key level of support at around 93, right there. If we go to the monthly, that's all going to be wicks. We see very well respected. And then if we do break below that level, let's just move this a little bit to the upside. So we get candle closures, and then we get a wick closure, very well respected. So if we do fall below this 92, let's say 93 level, I think the next major level is going to be around 88. And if that actually comes into fruition, it could go quite a ways down because once the psychology of people's kind of as a pool change, it's definitely going to be hard to turn it around. And when I'm talking about this, I'm talking about the velocity of the currency of the US dollar, right? Right now, it's very low. We've seen in countries like Japan just have an absolute capitulation of the velocity of currency where they can't really have inflation. They're fighting deflation year after year. And yes, the US could go into that, but I think that the higher probability situation would go into an inflationary environment similar to what we had back in the 70s due to the similar monetary policies created from the late 40s, 50s, 60s when they had easy credit, easy money, low interest rates because they were indebted from basically printing money for the war, and they couldn't pay off their debts, similar to what we see right now. And this created an inflationary bubble where there was excess US dollars in the pool of currency, and obviously that creates, over time, inflation, and that's exactly what we saw. Gold and silver absolutely skyrocketed. The US equities market, counting for inflation, was pretty stagnant. It didn't really move much. If you're not counting inflation, obviously it's moving to the upside, but you're not really getting more value out of it. You're just getting more units of currency that is inflating and lowering in value. So theoretically, you're not really getting much value if you're looking at it from a wealth creation standpoint, not just, how many dollars does this cost? standpoint. Very important to look at it from the first standpoint that we talked about. So now going on to the daily, we just want to get a good understanding on a long-term kind of large perspective, because in my opinion, very, very important to understand the weekly, the monthly, because that really sheds light on the potential outcomes on the smaller time frames, and it really gives good understanding if you are trying to look at it from also a little bit more of a fundamental standpoint as well, not just technical. Also, how's it going, Raj? I'm doing very well. Hopefully you are as well. So let's now dive into the daily chart for the US dollar here. We do see a failure to make a higher high, or even push above the previous high to hold this key level of a potential roof at around 94. Let's say 93.75 to 94 would be the roof of this potential zone. We see that right here. Now, this bottom does look like it's a potential, but we did not break above this zone. What we need to see is ideally a break above this high and then a higher low, because then we see a low, lower low, lower low, lower low, and then we see a higher low, right? And then we maybe potentially hold this resistance as a new level of support for the next low. So then we get a higher low. And then you got a nice bottoming structure with a key breakout zone at around 93.75, maybe 94. So these are the types of structures we're looking for ideally. Now, if it does roll over, there's a potential for the ascending support similar to what we had right here, key level of resistance, which did not break, and then we had an ascending zone, and then we moved to the downside, ascending triangle breakout to the downside to continue the bearish momentum. We could see something like that if we do get a higher low and then a higher low, and like a little bit more of a steady kind of drop where we get an ascending trend line, and then you get the initial impulsive push, you get a bit of consolidation holding a confluence zone, and then once that confluence zone breaks to the downside, you could be looking for possible entries in risk on positions or risk on trades, just because if the US dollar is strengthening, that's risk off. People are going into the US dollar because it's a safe haven. Look at what happened back in March, in February, when the stock market went absolutely just to the floor. Like, it absolutely sold off like the fastest I've ever seen. What happened in that environment? Well, a lot of people rushed into the US dollar. Gold, silver, yes, like spot prices, they went to the downside. If you're actually buying the physical gold and silver, if you're buying bullion, it did not affect the price as much. But overall, we saw a rush to the US dollar, Japanese yen, safe haven currencies. And I think that if there is another massive sell-off in the stock market, I think momentarily gold, silver, cryptocurrencies will all move to the downside along with the US equities market, and then the US dollar and other currencies like the Japanese yen, other safe havens, those are the types of currencies that are actually going to be getting a lot of the demand, in my personal opinion. So we'll see where it goes, but that's kind of the cause-effect relationship that I see in the market happening. So we just need to see if this is a potential bottom where we're going to get a series of higher lows. The stock market's going to consolidate a little bit, and then once we see a break to the upside above 94, we're potentially going to see a confluence where we get a stock market sell-off below a certain level of significance, at least. So that's going to be my overall view of the global macro perspective when you're looking at the multi-assets that we like to look at, currencies, we look at commodities, we look at currencies, we look at equities. Maybe I said equities, but we look at a lot of things in order to try to get a good understanding of not just what one asset is doing, but the multi-asset analysis gives a lot of perspective as to, there's a massive pool of funds for the entire world, and it's getting sloshed around. And during different market environments, it's going to funnel its capital in different places. And if you look back at history, you can see during different monetary shifts and uncertain times, some assets do well and some assets do very poorly. I personally think that we're getting into a point where currencies altogether, looking at it from a global macro perspective, will be doing very poorly. There's a lot of money printing, currency proliferation, and I think that sound money, gold, silver, are going to be doing exceedingly well. And I do think that cryptocurrencies, because they have a limited supply, 21 million for BTC, we will see similar attributes form with Bitcoin as well as precious metals like gold and silver, in my personal belief. That's just obviously speculation. No one exactly knows the future, but I do think that's where we're headed in the next handful of years. So that's the way I'm positioning myself from a longer term perspective. And I also like to trade what I'm investing, obviously, because I do think that they are overall bullish. So now that we've covered global macro, we're now going to dive into BTC. So did have a pretty significant pullback, which made sense because a lot of the equities markets have pulled back. And we do see a positive correlation between Bitcoin and traditional risk on assets. So I still view Bitcoin as a risk on asset, whereas a lot of people think gold is a risk off asset during times of monetary uncertainty, where I still don't really think that Bitcoin is there yet. I do think that inevitably it will, but I still value BTC and the overall cryptocurrency market as a risk on asset or a risk on asset class for speculation, my personal belief. So let's go to the weekly chart, really get a really good understanding of what we're seeing here on a large time frame. I'm just going to get rid of these price ranges. So I'm sure if you are in the crypto market or have been in the crypto market for a little while, you understand that there was a large triangle, symmetrical triangle, that basically every single person that knows anything about technical analysis was preaching, saying this is the breakout, this is the breakout. And we do see a pullback validating this previous high right here. Now we haven't broken below it. So I'm just going to take this out momentarily because on the monthly, this is a very important zone, but we're going to not really take that into account too much. I'm not really talking about it. Obviously, we do take into account, but we're going to mainly be talking about the weekly chart. So we're going to get rid of this. Now we're going to go over some different possibilities that we could see, and I'm not going to use a brush. I'm actually going to be using a snip tool, which I find a lot easier to use. And I'm just going to get rid of, obviously, that. So we're going to go over a couple different possibilities. We're first going to go over the bullish possibility, which I'm currently anticipating right now, and that is the previous high right here in confluence with this resistance zone. That is going to give you a zone of confluence with a horizontal level. We see this horizontal level was a resistance, was a support and resistance through this 2019 key level of a support in this triangle, and then it rejected that zone from the massive push that we had that really faked a lot of people out because people were thinking continuation after the triangle. And we were able to get that higher low from the low that we created in 2018 to 2019. I'm just going to push the batteries on my mouse. It was really not liking it. Right here. And then we were also creating a higher low from this zone. So we were creating a series of lower highs and higher lows, squeezing the price towards some level of an apex. And we see that right here. Now what we're seeing is an impulsive push that created our first move out of the contraction and volatility, because we've had two other times where we've had contractions and volatility as great as this one right here. And the first time that we can figure out in terms of the tools that we use was right here, where we had very, very little price movement for a while, massive expansion and volatility. The next time was right around here. After that, massive expansion and volatility. The third time is right here. And yes, we've had a strong push to the upside. This is a pullback, but in my opinion, I do expect the continuation to move to the upside, not just because of the contractions and expansions and volatility that we've seen in prior price action, but also because where it is on the overall chart, right? Broke this zone, also broke the horizontal zone, impulsive push, and now we're getting a higher low. We do see a high and a lower high. We don't really see a low that was held, but we're just going to be looking at this previous consolidation to hold as a new level of support. So let's now go into the 6-hour chart. And I'll be looking for potentially a series of higher lows, maybe like so. So we got one validation all here, very well respected. And then now we see another level of support for a higher low get respected as well. And then I think if we go to the 12-hour, Let's see if we can stick on the daily. I'm looking for a nice level of confluence with a horizontal zone right around there. Obviously, it's not absolutely perfect, but if we take this out to make it a little bit less confusing, and I think this out to make it a little bit less confusing, what we see right now is a nice pullback validating a key level of demand, where we see, yes, that's a massively aggressive push to the downside, but this previous high is now going to potentially be a new level of support. We also see one, and very well respected right here, and now we see a third validation with a type A. So we see multiple type A's on the daily chart, which in my opinion is enough to call it a valid zone. So now we're going to look and see if we can find a potential bottoming for BTC within this zone. Now this is all going to come together within different asset classes. So for example, if we start to see the S&P not create a series of higher lows and it starts looking like it's very weak and going to move to the downside, BTC would probably fall if the S&P falls as well. So we got to understand what different assets are doing. Well, it helps, in my opinion, when you know what different assets are doing, because we pool different assets together, whether it be risk on, risk off, and looking at anti-fiats if the US dollar is weakening a significant amount, or depending on if there's massive amount of fear, if everything's selling off. You know, funds go places when there's a lot of emotion in the markets. And looking back at historic key moments that have happened really helps with that. So we're now going to go into a smaller time frame and try to understand what's happening within this nice bottoming structure. So what we see right now is massive sell-off, and here's where we started seeing a little bit of hesitation. We saw a little pullback here, and then we saw quite a significant pullback here. I really like this horizontal level, and we can also draw another horizontal level right here. So I'm going to be viewing this zone right here as the potential level of a roof that if we do break, we could see a nice bottoming, because we do see a low, a lower low, lower low, but now we held that low, right, with this ascending zone right here that we indicated on the 4-hour chart. So we do have lots of demand. If we start seeing a higher low, let's actually go like this. If we start seeing a higher low, and then we start to see something like this, well, then that could indicate a nice bottoming structure, right, where we see key levels of resistances get broken, key levels of support get held. But the one thing we do have to keep in mind is something like this. We can get an ascending zone, and then once you see a massive impulse push to the downside, breaking a key level of support, it could be continuing to further move to the downside. So there are a couple possibilities that we could play out from this, but as of right now, the overall bias for me is it's going to continue to the upside. So let's get the rectangular zone, and that's that area that I'm looking for a possible resistance. Obviously it's very large, and we could refine it by going like this and then copying it and then putting that on the top one, where this is the first potential entry level where you could be using a feeler trade. And then once you are able to break the key zone, which in my opinion is around 10.8, then we could be looking for opportunities, because we do see 10.8 was a key level of support, and that was our resistance point before we made further moves to the downside. So I think if we are able to get above that zone, we could have a nice move from around the breakout to maybe a lower high, because we do see a high and a lower high. I wouldn't mind seeing a symmetrical triangle set up the next big move, so we could see a little bit of a further contraction in the price action. There we go, like so. So we could see a validation of a third low or higher, a lower high, sorry, and then we could see a higher low, and then we inevitably start squeezing towards the resistance, maybe create a symmetrical triangle right there. And once you see that breakout, that's going to be a really good opportunity once you see 3 lower highs, in my personal opinion, for BTC. So That's going to be a little bit of a longer term outlook. Definitely could be until the end of September. So we do have a lot of price action that we could be trading here. Even just to move from a potential breakout if we do see a symmetrical triangle here, or if we're looking for continuation, we're still able to make some pretty significant gains, even if you're leveraging 2-3 times. Not much, really managing risk, knowing exactly how much you are risking and not trying to over leverage, and that just destroys you on fees and stuff. Try to use the least amount of leverage you kind of can with the capital you have, ideally, while risking the same amount. So anyways, that's BTC. We're going to be looking at Ethereum next because, in my opinion, Ethereum does look quite solid. Main level that we want to be looking at is around 300. My mouse is kind of being crazy on me today. Let's now go on to the weekly and discuss why this $300 level, not just because it's a psychological level, but also because this was the roof of our bottom. This is, in my opinion, a double bottom within a double bottom, where we see this large double bottom right here, but you also see a little bit of a double bottom there as well. So lots of nice bottoming structures, and also you see this nice rounded bottom there as well. So overall, in my opinion, this was a bottom for Ethereum, and now we're breaking out and we're going to be forming a nice move to the upside where we're going to be holding this previous resistance as a new level of support. Just have to get some water there. And that's on the weekly chart. One thing to note is there is a massive rejection on the weekly chart right here. Lots of volatility to the upside and downside. But these sometimes, if they do have lots of wicks to the upside and downside, could create symmetrical triangles on smaller time frames. I have noticed a lot just through, years of just looking at charts and just seeing them play over and over again. These massive high and low wicks, if it's not a massively if the wick is not on one side massively, like for example, this candle has a huge wick to the downside and no wick to the upside, that obviously indicates that buy pressure was able to pick it up and really aggressively bring it all the way back up above the open. And this candle right here, I'd say a shooting star, morning star, wick to the upside, and then sellers, bears were pushing it back down and actually closed below the open. Very bearish candle. But this, yes, it is a bearish candle, but we do see a wick that is pretty even on both sides. So we'll be looking for something like that. And that may look something along the lines of this. We don't exactly know, right? But something along the lines of that, where you get, and then once you see that break of the high, it could be continuing the overall direction. But what we're seeing right now is we don't have any validation even of a second high, so we have no idea if this trend line is even going to come into fruition. We have zero clue, and that's totally okay. What we're going to be working with is the price action down here, because that's currently where the price is and that's where it's trading at. Just looking at the 4-hour chart, zooming back a little bit, this $300 zone, like I said, very significant level. We have been seeing buy pressure pick the price up, injections of demand coming in not just once but twice, creating a higher low actually, and not only that, breaking this descending resistance zone, 1, 2, 3, 4 rejections, validating it as a key level of descending resistance. And then we see a break, not really significant because we didn't even pass this high right here. And if you've been following us, you know that we not only like to break the descending zone for buys or bulls, we like to break the horizontal zone as well. So we like to look for confluent zones that break to the upside, and we do not see this horizontal zone break to the upside yet. So this is not a breakout. Usually people, right after they see the break of the descending zone, they'll enter, but we found that waiting for confluence to break provides the best dependability, and in my opinion, it's just a better way to trade, is be patient, wait for those higher probability opportunities, basically, in short. And that's what we're going to be doing today. So we're going to be looking at the 1 hour, I think, the end of it, but mainly what I really want to see is to see this key zone at around 356 break to the upside, even before looking at opportunities, because we haven't really broken market structure yet, right? What we see right now is just a consolidation sideways. We haven't broken this high, we haven't broken this low, right? So right now we're just consolidating. I don't really like trading in them. I'd rather trade breakouts. So what I'm going to be looking for is a potential move to break out above the 356 range for Ethereum. All right, so that's going to be mainly it for this video. We're going to finalize it just by looking at some of the tools that we like to use for the altcoin market. First one is going to be the Total 2, which is the cryptocurrency market cap without Bitcoin. I'm going to get a little bit of drink of water and then we're going to continue on. All right, so this looks very similar to Ethereum, which makes sense, and we still have, looking at the Total 2, a validation that this previous resistance, we can even see back in 2018, such a strong level of support, right? This is still a level of support, so I'm still going to be bullish. There's no reason to be bearish yet. If we start to see the risk-off sentiment grow and kind of create fear and uncertainty in the market, if the S&P falls, if the NASDAQ falls below key levels of demand, if Bitcoin starts to fall, people are going to be speculating less on altcoins, so the market cap will slowly diminish and potentially fall below the support. So there's a possibility, obviously, but right now we haven't seen that yet, and the price action on the larger time frame is still showing me that this could be the higher low for the next impulse push to move the market cap to the upside. So I do not want to be very bearish on alts just yet. And if we don't break it, we're going to be very bullish. And we're still bullish. So that's the bias that we currently have. And let's just bring this up. Actually, I'm just pretty happy with that. So that's going to be the key level of demand. We could go like this and just create it a little bit more. And it looks very similar to Ethereum, right? We see a break to the downside. And then we see a potential break and retest of a descending level of resistance. We're not going to dive into it. We obviously don't trade this, but it's good to see the price get some buy pressure at the previous resistance there. Now, the final thing we're going to be looking at is the BTC dominance. So this is the percentage of the Bitcoin market cap against the entire cryptocurrency market cap. So Bitcoin takes up currently 60.67% of the total cryptocurrency market cap. So Bitcoin is a very significant asset to pay attention to if you are trading, investing in the cryptocurrency market. We do see this key level at around 62 break to the downside. We have retested it twice so far, making a lower low, coming all the way back and retesting the zone. So it's a little bit of an expanding zone where we see a level of resistance that's horizontal hold, but then we see the lower lows continue. So we could see that next leg down really getting that massive drop, which would mean that altcoins are going to be gaining lots of buy volume compared to BTC. Could be a possibility. We've definitely had it before. When we see massive bull runs in the cryptocurrency market, if we zoom back a little bit, we can see that Bitcoin dominance can absolutely fall off a cliff if there is lots of overall bullishness and speculation occurring in the cryptocurrency market. So we don't see that massive sell-off just yet, but we do see the lower lows. So I do expect this overall altcoin bullishness to continue. So we are going to be looking at altcoins. So that's going to be the end of the video for this Monday. Hopefully you enjoyed it. Hopefully you're having a good Labor Day. And if you have any questions, drop them in the comments section below. I will definitely answer them if they're able to help you out or something. Hopefully you enjoyed this. If you found this entertaining, educational, informative, it would be great if you do share it with a friend. If you'd like, give it a thumbs up and subscribe to our channel so we know that we should continue making more videos like these. Thank you very much for watching. Really appreciate it. Like again, thank you very much. Hopefully you had a good weekend, and hopefully you have a really solid trading week ahead. So until next time, have a good one.